Well, hello everyone. Welcome to Getting Started with Technical Analysis. Today we are talking about ceilings and floors, or support and resistance. We are going to kind of go through the basic concepts, and then we're going to spend a lot of time looking at charts and looking at support and resistance, desistance, support and resistance for stocks that are going sideways, for stocks that are uptrending, and for stocks that are downtrending. We'll place an example trade. So we have got a lot to cover. This is an introductory level class, and so I do my very best to speak in English at all times, but there is a language around the world of trading. So if I say something and you don't quite understand, we've got the fantastic Mr. James Boyd in the chat with us today. I don't know if any of the Canadian flags I bequeathed upon him back in the fall are still around, but yeah, glad to have James on board. Okay, so if you are not following us on X, consider this your invitation to do so. My handle at Barb Armstrong CS, and James at James Boyd CS. We both are posting content there on a daily basis. It's a great way for us to be able to communicate with you outside of webcasts like this. Okay, so just before we get into the thick of things, know that all the examples that we provide today are for illustrative purposes only. None of them intended to be, an indication of the kind of results you might expect to achieve. This is a technical analysis class, so we're going to spend our time focused on the charts rather than looking under the hood at fundamental analysis and things like price earnings ratios and that kind of stuff. Although this focus is on technical analysis, we're not recommending that this be your only basis of making a trading decision. We'll use the Paper Money software application on the Thinkorswim desktop platform. There are some nuances and differences between the Paper Money platform and the Live platform. We'll point those out as we go along, okay? So I've designed this to be taught in a 9-week rotation. So this is kind of the basis of this class, although we do insert a few bonus sessions along the way. So we've done sessions on Fibonacci's and on Bollinger Bands and lots of other topics. I did one on, the 8 things I wish I'd known when I got started in the world of investing and trading. And so stay tuned for those as we go through. But today we're talking about support and resistance. And so that's going to be our focus today. Next week, you won't want to miss it because we'll be talking candlestick patterns. If you have never been to a live event, this is how I got introduced to the world of trading. You can go to schwab.com/events and see the calendar out through the year. We're going to be all over the place. We're going to be in Boston. We're going to be in Hawaii in November. We're going to be in New York in December, in DC in October. Like we're all over the country. But in the next month, we're going to be in Seattle this coming weekend. Ben Watson and I will be there along with the travel team. And this is a getting started with technical analysis and getting started with options on a Friday, Saturday. The following week, we're going to do it again in Sacramento. And then at the end of February, we've got the first market drive of the year. Kevin Horner and I will be joining Ben Watson and the travel team there. I believe Mr. Joe Mazzola will be at that event as well. So these are all free to attend, but we have space constraints. So if you are interested in joining us, please make sure that you register so that we can save you a seat. We'll have the coffee on, we'll have breakfast, we'll have lunch. For the market drive, we even have a really nice reception at the end of the day. Okay. Okay, so the market drive, like somebody said, we start with kind of globally what's going on with the markets. We look at what's happening, within our country. We look at tariffs, and then we look at what's happening, with currencies, and then what's happening with sectors right down to individual stocks. So we go from here to here in one day. So it's a pretty interesting day. Okay, so yeah, if you want more on that, you can go and click on it and it'll give you a little bit more detail. Okay, so we're going to cover, like I said, the basics of support and resistance. We're going to discuss trend lines and their purpose and look at ways to identify support and resistance. And then we're going to bring that all together by spending, a lot of time on the charts. Okay, so what is support? And I used to find this confusing in my little brain. So if you find this kind of a little confusing sometimes, like join the crowd. But support, I think of as the floor. It's an area where, if the price has been falling, where buyers tend to step in and prevent the price from falling further. And we can see in this example here that, it's come down to this support level, not once, not twice. Just let me get my drawing tools. Awoken. We're going to wake them up a bit. So it came down here, and support, it's not a finite number, it's a range, it's a general area. So like it spent like a whole, week and a half here, and then came down and hit this again. And I think of it, my father-in-law was a huge fan of medieval history. And I see this as kind of like every time you come down and hit a support level and bounce, it's like another knight comes to, guard the castle, so to speak. And the more often it comes down and hits it, the more sentries there are to protect the position from going under. And that isn't to say that it can't happen, but it's considered to be stronger, the support level, the more times it comes down and hits that particular price. And, as you can see here, the more times the support is hit, the stronger that support level is considered to be. And again, like I said, general area. It's not a finite price. It's not $50.20. Okay, per se, as an example. So, and resistance is kind of the other end. It's the ceiling. And again, the same, logic applies. It's a general area. It's not a finite or a specific price. And as with, the support level, the more times something comes down, that this comes up and bonks its head on the ceiling, the stronger this resistance level is seen to be. Okay. Now, I don't want to jump the gun, but for those of you, because I know some of you, have your senior patch and you're looking at this as a refresher. Whoops. Let me just change my drawing tool. Some might look at this and say, well, if I'm playing I Spy with my little eye, I see an inverted head and shoulders pattern here. And we're going to talk about these patterns. And when there is a break above, let's say that this is a $50 wide range, then if you're placing a new target, you might say, well, I'm going to take this price, X, and I'm going to add $50 to that price to come up with my new target, my new target. And that's how we can use support and resistance to determine a target. But here's support, here's resistance. Okay. Let me wipe the slate clean. Yeah, and I really like this analogy of, if you think of this as a building, the ceiling on one level becomes the floor on the next, or the floor on an upper level, if it breaks to the downside, can become the ceiling on the next floor. So, old resistance, the old ceiling can become the new floor. And if we're, breaking a support level, old support can become new resistance. Old floor becomes new ceiling. And again, we looked at what we're looking for here, and now we have a new floor established, double bottom pattern. And it looked like for this one day that it might be breaking out. Turned out that wasn't a breakout, it was a fake out. And, could it be setting up a triple bottom pattern or a cup and handle? We don't get to see the rest of the chart, so we can only speculate. Okay. And this is something like I find technical analysis fascinating because sometimes you'll see something that looks so much like this on the charts. Like this is a real chart. It's almost uncanny how things will come to sometimes in such a tight range. And so if we draw a trend line, it's, linking together areas of support and resistance drawn, diagonally. And we're going to look at several of those today on the chart where we're connecting the lows, for a bullish trend line or connecting the highs for a bearish trend line. And the technical analysis pundits, whoever they might be, would say that a horizontal support and resistance line only needs 2 points of contact. However, a trend line needs 3. Okay. Jay is saying, is it left to right for trend? So we're going right to left. We're going always, sorry, from my other right, left. We always go from the left side to the right to determine trend. Yeah. Okay. Now, what we see sometimes is a channel, and we're going to look at a few of those on the charts today where, the areas, we have a support level here, a resistance level here, and they're kind of running parallel to one another. And what some traders might do is look for a breakout. And in this case, this one broke to the downside. And saying we had a really nice uptrend going here, and then it fell out of bed. This would be considered a break of support. And so if you had a bullish position on, you might say, hey, this was all well and good while it was uptrending, but now I see a break of support, and maybe I want to batten down the hatches and consider exiting that bullish position. Yeah, so somebody's asking if this works in different time frames. So this would work within the context of a day, within the context of weeks, within the context of months and years. So it'll work in any time frame. And then sometimes we'll end up with a gap. So something will gap to the upside. Sometimes it'll come back down to where it broke out from. And sometimes it will just continue to run to the upside. And this, where it opened when it gapped, can end up becoming a new support level. So, gaps can indicate a new level of support and resistance. And the bigger the gap, the more significant it is seen as. And if you have an earnings announcement after the close, that might be a situation where, really good news comes out and we see the stock gap up the next morning. We can also see it gap down. Okay, so let's get out to the charts. And let's start with the S&P 500. So when we look at the S&P 500, this is a 30-day moving average. But what we're seeing, this market hit a new all-time high today. And if we wanted to draw a support level, we might draw a support level that looked something like that. And it had been kind of consolidating a little bit, forming a bit of a wedge pattern, but it's knocking up against the upside today. In fact, hitting a new all-time high. Now, if we look at Apple, we had this stock that was beautifully uptrending, could have brought a tear to your eye, using the 30-day moving average as a support level. And this red line being our 30-day moving average. So it closed here below, and within 3 days back above again, came down, kissed it, came down a little kiss and tell, came back a little kiss and tell again. But then we broke down here, and we did an example trading plan a couple of months ago that if you're interested, you could go look up in the archives. And kind of the idea was that if we bought the stock, let's say we bought it when it broke out here. So let's say we bought it on this day, we would have put our first stop here. And then when it came down and kissed that 30-day moving average, we might have moved our stop up to here. Now, a stop is not a guarantee that you're going to get out at the price requested. And then if it closed below the 30-day moving average and we had this red arrow, we'd move it up again. And then when it came up here and kissed it, we might move it up again. And so the idea is, in the beginning, we're trying to define our risk, and now we're trying to protect some of our profit. And again, with a stop, there isn't a guarantee. And if we'd moved it up here, say to around here, I haven't done the math, 3% below this level, we probably would have been out of it sometime around here. Now, if your rules say, I consider entering a position when we see an uptrend or a diagonal break of resistance. And so if we look at this now, and let's say we don't own Apple any longer because we had employed that set of rules, what might we be seeing now? So we can come here and say, hey, and what we're just trying to do is link up as many dots as we can. Now, some people will include the wicks, some people not. But we're coming right up to this resistance level. And even though we've had two really bullish days, the stock is up another 1.68% today, it hasn't quite broken through yet, has it? We've got earnings coming on Apple this week. It's still not above the 30-day moving average. And some might say, well, I'd like to see it break above this resistance line and then maybe come back and retest to have confidence that it's a true breakout and not a fake out. So this would be considered a diagonal resistance line. And it came all the way down to here. And if you're saying, like, that looks like it's in the middle of nowhere, and it does, but it's actually, here we had a support level here back in October, and it came right back down to that support level around the 245 mark. Yeah, so James will say, like, he doesn't like to look at the wicks because this may have been like a 1 minute thing. So he calls himself body to body Boyd. So feel free to adopt that if you like. So let's come and look at JP Morgan. So here's another type of chart where we've seen something where we have what? We've got a support level that has a bunch of similar lows, right? So we're calling in our reinforcements. We had 2 days here, and then a couple of days here, and then it came back into the hood again, and it's recently just come down and bounced again. And then we had kind of similar highs up here, and then it looked like it was breaking out. It broke out, it came back and retested. So, some people might have placed a bullish trade, and then it came down, looked like this support level might be holding, and, lo and behold, it broke back through this old resistance, which appeared to have become new support, and it's back in this range again. Yeah, so it still looks kind of range bound, doesn't it? But, some people, especially if they trade options, they might say, well, this looks like a pretty solid support level. We're on the other side of earnings. Maybe I'd be comfortable placing a short put vertical trade here or something like that. Or maybe if I don't like to trade options, maybe I could buy the stock here. And if I wanted to do it as a short-term trade, I'm going to put a target up here around the 320 level. If I'm looking to just generate some income, say, or I'm looking for a small win, and say, I'm going to buy here, I'm going to put a stop, below this support level where I don't think it will go. But if I'm wrong and it does go there, I'd rather get out sooner rather than later. And then I'm going to put my target up here. Okay. Okay. So that's JP Morgan. Now, Target has also been going sideways. So let's look at Target. And I had posted a picture of this on X a couple of days ago. And so, like, really, since last March, like, this is almost, it's 10, 11 months in. It's been trading in this range between 86 and about 107. And then it looked like we had a breakout, right? So this is, and if we're looking at patterns, what would we call this? A double bottom. Oops. We'd call that a double bottom. And then it looked like we had our breakout. Was it retesting? Well, now it's kind of come back into this range, and it looks like this 30-day moving average may be acting as support now, but it hasn't been acting as support for the last 10 or 11 months. The stock has been weaving back and forth through it. But, the trend is your friend until it ends. And so, it could come back and break out, or it could break down below here, but we don't really have any confirmation quite yet of what it's doing if you're looking at a broader term context. Okay. And I find that when I draw the lines on the chart, it just helps lead the eye. And sometimes it can lead the eye astray. Yeah. But, and this one is for you, James. James posted a picture on X one day. He was out cutting his grass or something, and he was wearing a pair of Crocs, and he didn't put sunscreen on his feet. So he had these little round burn marks all over his feet. Do you remember that? But yeah, so we used to laughingly say, don't mock the Crocs. We had, if we're looking back, we had lower highs here and higher lows. And then it kind of broke through, tried to rally, and then earnings came out and it got hammer smashed or clobbered, however you want to look at it. But, and now, and that happened when? Well, that happened last August, and it hasn't made it back above this 91 since. So, it looks like we have a support level here around this 73 mark. Just see what I've got here. Yeah, support around 73. Spent a whole week here, and a ceiling around this, kind of 91.80 or $92 mark. And so someone said, well, how could we trade this? Well, some people might say, well, what I'm going to do is when it comes and bonks its head here up at the top, I'm going to sell a short call vertical. Which means that I benefit as long as it stays below this. If I sell, say, the 92, as long as it stays below 92, we're good to go. And then if it comes down here, I'm going to sell a short put vertical below here. And then for those who are saying, what, why don't we put them together, make a credit spread sandwich, and we call that an iron condor. And it's not that we're going to trade these in this class, but, it's like, what can you do, if something's going a whole lot of nowhere? Like, can we benefit from that? Potentially. Now, what could go wrong if you did that? Well, it could blow through here or it could blow through here. But one thing it can't do is be in both places at expiration. So this is why some people kind of like this strategy. Now, if you're a stock trader, some might say, well, what I'm going to do is I'm going to buy it down here. I'm going to buy the stock here. I'm going to sell it when it gets up here. Or I'm not going to sell it. I'm going to sell a covered call on the position. I'm going to buy it when it bounces here, sell a covered call. And then if it comes back down to this support level, I'll buy back the covered call. When it goes back up, I'll sell another one. And if it breaks out and blows through and I get called out, well, I'm okay with that. So, this is a way of using support and resistance and being able to identify trend to make informed trading decisions. Okay. How about O'Reilly? And if there are any particular stocks you'd like to look at, just type them into the chat, because I made myself a list of ones that were going up, down, and sideways. And, so what do we see here? A song from Queen comes to mind when I look at these, because we've got, two big bottoms, right? Two fat bottoms here, that are making our double bottom pattern. But what do we look at with a double bottom pattern? What we're looking for is a breakout above this ceiling or resistance level. And do we have it? Yeah, we do not. Okay, let me just write a few of these down. Microsoft. Boy, I opened Pandora's box here, didn't I? Okay. Okay, and so what we're seeing, like from a candlestick perspective, when we look at this, we're seeing this hanging man. And what does that say? What that hanging man candle pattern indicates is, hey, the fun may be over, boys and girls. Looks like this ceiling is still intact. We may be heading back south, down into the mine. So in that case, what might a trader do? Well, one, we got earnings coming up, so we may decide to wait. But if we didn't have earnings coming up, you might say, well, here's a chance if I own the stock to sell a covered call on it, or if I don't own the stock to maybe do a short call vertical, which is an option trade that says, I think this is going to, which is successful as long as it stays below the strikes you've sold. Okay. So our belief then is that this is going to stay in this range based on these candle configurations. Okay. Now I want to look at a couple of bearish trades, and then we'll start looking at the ones on your list. So let's look at snow. Now, a lot of you are buried in this stuff. This is actually not like a skier's stock or a mountain resort stock. This is a tech stock, but if we look at, remember we talked about channels. So I just kind of drew this line with the body to body Boyd idea, trying to hit as many as I could and then replicating it. And so we can see it's trading in this downward range, right? And when we draw those lines, it kind of leads the eye. Now, again, sponsored by the letter S, this section. What if we look at Spotify? And again, I just kind of drew this line. So, and let me just show you how I do that. Not that you guys need help drawing lines, but you just draw your line and then you come up here and right click and duplicate it and then grab it and bring it down. And you're just trying to get touch as many as you can. And so it's been trading in this downward range. Now, some might say, well, how could I trade that? Well, you could buy this stock here and sell it when it goes up, but this is a downtrending stock. So you might say, I would rather do that on a stock that's uptrending, like maybe Amazon. Oops. So with Amazon, it's been uptrending, and we've seen, if we draw this line, a series of higher lows, but now we've got some lower highs. But, as this pennant is forming up, when we got here and we had this, we call it a hanging man if it happens here. Here we call it a hammer. When we saw this pattern, could we have either bought the stock or bought a call, which we call a long call, with a target of when it gets up close to this ceiling imposed by this diagonal resistance line, we exit the trade? Sure, we could have done that. Well, now we're almost at the ceiling, so we'll have to see, is it going to break out above? Is it going to roll over and come back down? Oh, we don't know yet. And it hasn't really declared itself, has it? Okay, so going back to our S trilogy, we did snow, we did spot, see spot run, and it was running down the hill. Here we had Shopify. Now, you know, we have this really nice uptrend using kind of the 30-day moving average as a support level. I mean, it's just such a pretty uptrend. Could almost bring a tear to your eye, right? Like just going up. And like they say, trend is your friend until it ends. And then we have this break below. Well, we're not getting our knickers in a twist. It flirted with it here, closed below for a day here. But what do our rules say? If our rules say, if we're doing a simple trading plan and we own the stock, if it closes below, we're going to move our stop up. You know, and again, stops don't guarantee that we're going to get out. But if we'd moved our stop up to here, then it kept going up. Then when it came down here, if we moved our stop to say 3% below, we probably would have been out on this day. And then we would have been really annoyed the day after when it gapped up, but you know, then it came down again. And it's been setting up this pennant pattern, you know, and you can see these lines I've drawn here, but you know, it recently broke out below. So we had a break of resistance here. And then it started to consolidate and we're going, wow, Shopify, you know, it's a strong platform, broke out again here. And when with these pennant patterns, we're looking at for it to break either to the upside or the downside. And this one went to the downside. Now, where might it go from here? I like that question. You know, to give you a highly technical answer, when I first started watching these as a client, the instructor that I watched most often used a 10-day moving average and a 30-day moving average, and I've tended to do that and it served me well. But you might want to experiment with a 20 and a 50. It just depends on the types of trades you're placing in. And are trading a smaller account, which I teach Mondays and Fridays, we tend to do a lot of very shorter, like they're predominantly shorter term trades. So that's why I've continued to use those. But so if we come back and we look at this, it's like, well, this has come down to a previous support level here. And, you know, if we extend it further to the left, support here, 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 might this hold? Well, it might. We've got, you know, an inverted hammer here, a hammer or a doji type pattern here. So this might hold. But with the market being so bullish and, you know, other stocks like the Googles of the world, you might say, I'm looking for a trend that has been a little more consistent. Yeah, so Paul, you're right. That was looking like a horizontal support line. And here, you know, we could just have put this in our dictionary as a moving average acting as a support level. Like when it's crossed below the what? How long did it spend below the 30-day moving average? 2 days, 2 or 3 days, 1 day, 2 days. You know, it's just been marching on up the hill. And so some might say, well, haven't we missed the move? And you could say, well, you could look at it that way. But then you might have looked at it that way back here and said, well, look, we've missed the move. Or you might have said that here. Or you might have said that here, or here, or here, or here. And, you know, we might be saying that again today. But, you know, we don't have to get the whole move. So somebody's asking how to use the arrows. I did an example of a simple trading plan. And if you go to the archives and scroll down, you'll see it for the getting started with technical analysis. Okay, so let's look at INTC. So we saw this come down to this support level. And then today, old resistance. Is it now going to behave as new support? I mean, this really took a tumble. And that leads me to think like, okay, it took a tumble on earnings, but what are other people saying about this? Well, New Street just adjusted their price target to 50 from 40. Citi and this is just interesting to me. So one went to 50, one went from 38.90 to 60. 60 is way up here at the top. 50s, kind of about in the middle. It's lower than where it was just prior to earnings. But, if we wanted to do this as a stock trade, and today we have this Harami pattern, also a doji pattern, but a Harami pattern at a support level is considered a complete pattern. Could we buy some shares of stock and just put a target up close to the previous high, maybe make it $54? And so how would we do that? Well, we'd come to our trade tab, we'd right click on the stock, and, just to make it a complete trade, where might we put our stop? Well, we might say, hey, if it goes, 2% below this low, like if it continues to drop, then we want to cut our losses. So if we take that, say 42.28, and go 2 or 3% below that, 42.28 times 0.97, our stop would be at 41.01, and our target's going to be at 54. So, and let's say we'd be cool with a position size. This is a $500,000 account. So we could do a position size that's 5% of the account value. So we could do about 400 shares. So we're going to buy custom. We're going to put in our target of $54 and our exit at 41.01. 41.01. Oops. Didn't quite. And we're going to do 400 shares. And so how much are we risking? We're risking $2.98 a share, that because of where our stop is placed. Now, again, if it gapped down, we could end up out at a lower price, so there's not a guarantee. So, but we're risking $3 for the opportunity to potentially make $10 a share. So times 400 shares, so 4,000. And we're risking about 1,200 to do that. And so this would be called a swing target. We just want to trade it back up to the previous high. Okay, so there's our example on that. Now you guys wanted to look at some other examples. So let's look at Microsoft. So here's a case of resistance, ceiling, and floor. And it kept hitting that floor, like it hit that floor many times. And then it broke down below. Old floor became new ceiling. And it's like bonk, bonk, bonkety bonk, bonk, bonk. And then it came down, and the floor, which it had hit like multiple times, all of a sudden it broke through that floor. And then it came up, and, this is now considered a potential resistance line. But did it hold Microsoft back? No, it kind of blew right through it. Kind of peaked above yesterday and breaking through above today. Now we've got earnings coming on this and 3 other stocks in the Mag 7. Yeah. Sal, I like your question, but it's kind of beyond the scope of this class. We're not going to do an options trade today on that. But you might look at, if you were doing a long call, you'd want to give yourself, at least 3 weeks plus the amount of time you think it might take. So if you think it might take 2 weeks to get up and hit that target, you might want to go at least 5 weeks out. So here is RBK. So I look at this 30-day moving average and I see, this is rolling down the hill. And then on the last earnings, it tried to break out and then it's continued to roll. So, we've got a downtrend happening here. Let me just change this. So I'm sorry, we're running out of time, but let's look at just one other. How about we look at Tesla? It's like, well, always lots of conversation around Tesla. And, by and large, since it hit this low back here in April of last year, currently we're seeing, things uptrending. Hit a new high here, a new 1-year high anyway. And so, it's pulling back now. So the patient person might say, one, I've got earnings coming up. Who knows what will happen there. And I want to see that this support level holds. So I'm going to be patient and wait to see this bounce before I consider placing a trade. And if it breaks to the downside, then you might want to place, a bearish trade. Okay. Okay. So guys, that's what I had for you today. I hope that you have found this helpful. I know we could have hung out together and looked at another 20 or 30 symbols, couldn't we? But what I encourage you to do, like as homework, is go out and just start looking at some charts and drawing lines on your charts. Where do you see potential support and resistance? And if something breaks through, where do you think it might either rise to or fall to? And where's the support on the charts or the indications on the chart for that? So if you haven't hit the like button, I'd ask you to hit the like button. It helps move this up in the YouTube algorithm so more people can find this content. If you're new and you haven't hit subscribe, please hit the subscribe button. And it just takes you to Trader Talks from Schwab Coaching. So you'll want to join Trader Talks. And what comes up when you first go into Trader Talks is what's currently being taught. And then if you come to playlists, you can scroll down. And next week, we're going to talk about candlesticks. But if you want to do some prep work, under the trade management mini sessions, I've grouped a bunch of short videos on candlestick patterns together. I'll put a link to this in the show notes below and at the end, but we've got 12 of these and they're all like 2 to 5 minutes long on different candlestick patterns and what they mean. So you're welcome to check that out. Also, if you're interested in coming to a live event, if you come to schwab.com/coaching, not only can you see all the in-person events and there will be more added, I will tell you that. But we're in DC. If you come to DC, Sacramento, or San Diego, I will be there. Please come up and introduce yourself. I'd love to meet you. And then we'll be in, Atlanta, in Denver, and you can click on here to learn more about these classes and, how to register. Again, all of this is free. We'll even pay for your parking. So it's a very cool deal. And then if you want to see what's cooking with the live webcast schedule, if you come to the webcast, you can see everything being taught all day long. So here's January, we're at the very end. So here we are with getting started with technical analysis. Up next will be swing trading with Mike Fairhorn. So I want to thank James Boyd for hanging out in the chat with us today. I want to thank all the people behind the scenes who helped bring this class to life, and to each and every one of you for showing up week after week and in continuing to invest in yourself and in your financial future by coming to webcasts like this. So thanks, guys. I will see you in a webcast coming up soon or in Seattle this Friday and Saturday. Take care.